Good morning, everybody, and this is your S&P 500 day trade setups for today. Starting off on the 8-hour as usual. Now, a couple of things going on here. So we do have a lower low here, no real diversions or anything. Sort of week on week, we've got a much lower low. Well, not much lower, but it is a lower low. There it is there. But what I'm seeing on the most of the markets is. So let me just get this lined up nicely. So if you look at this, you can see we've got a decent trend line on the DAX and the Dow Jones. We've broken that trend line on the weekly and on the monthly actually, whereas here we haven't. But pay attention to the monthly oscillators here. They are grouping, sort of starting to get into area where they would be separating for a move up. That is just setting up a flag. Not to say that this flag will happen this year still, but it's very possible that something does break out towards the end of the year. I'm very, very cautious here at the moment. There is a lot going on. So obviously you can see there's the lower low that has formed. And if you just look at this on the daily, oscillators easing off quite nicely. Got the crossover. We had the test of the crossover yesterday, and that is off a level. There is my level there. So I have tested that twice, 2 days in a row, and I also have an engulfing bar there. So what does that mean? Well, quite simple. That level there is the one to watch, and we'll get to that on the lower time frames. So if you're trading this on a lower time frame, any break above here, you're long with a stop below these tails here. That's kind of the setup that you have. We are just below the 155, so we are flirting with it. And we have that magical number 4,000 just ahead of us, which I reckon is going to get tagged today. It's either going to get rejected or it is going to get broken, and we're going to get a weekly close above it. So 8-hour, we've done nothing really more we can talk about there. 3-hour gives us a bearish view. You can see the oscillator separated, moving to the upside, and a lot of confusion going into it. Look at the double rejection here, or attempted double rejection at 39.79. If we start dropping to the 1-hour, you have a little bit of a different picture brewing. So we are above the moving averages. We are below the 155, granted. The oscillators are in a sort of a bearish outlook, or saying we are overbought, and you should be looking for a level to sell off, which is kind of something along the lines of that and that. So there are your major levels ahead. That's overhead resistance. But on the other hand, we have pretty much, I think we should do that rather. We've broken above this previous structure, and we found support there yesterday. Messy, but we did find support, and that's at 39.54. So remember what we said yesterday, 39.50. If that holds, then you're looking for 4,000. So I still am of the opinion that we are heading towards this 39.96 and trying to get above that 4,000 area at the moment. If I just drill down to the 15-minute, you can see typical trend reversal. So the trend was down for a couple of days. See there, pretty well structured downtrend, and then it just gets messy yesterday as we moving averages cross over and we start looking at a different trend starting to form. In other words, we're looking for a bull trend to start forming. So this is a pretty simple one for me. Retest down here at 39.54. I'm a buyer. Alternatively, what I'd be looking for is, I'm going to use this level here. I think that's what we want to do. One more. Okay, so this has been tested this morning. See, that's the previous swing high there. So that would be something I'd be paying attention to as well, was 39.61. So pull back into that area. I'm looking to buy. I'm looking to target 39.96, 4,000. I am definitely not interested in being short right now. So that's kind of my view. I suspect we're going to close above 4,000 today, to be honest. I think that is what we're looking at. If you look at the raw data in the market, the data is not agreeing with what the economists are saying, or not so much just the economists, but the whole of the internet and every second person who is saying that we're heading for a recession and doom and gloom for the new year. That's not what the data is saying. So if you go have a look at the data, you'll see jobs market is stabilized. Job market is actually very stable and growing. US spending is up. There's just there are no indications there that that the fear what the fearmongers are shouting is actually being supported. And when you've got big players like Michael Burry, who has a habit of just tweeting and then deleting his tweets, he's been short most of the year, and his latest outlook at the moment is he's not short anymore. So yeah, I'm very cautious. I don't want to get sucked into the noise, but you need to keep it in the back of your head. So for me at the moment, this is clear trend line to the upside right now through yesterday, and I expect that to continue. It might still be messy with a squirt up right at the end of the trading session today for a close up, but I'm looking for longs. That's pretty much my view. If we start dropping below the lows of yesterday, then I will start changing my tune, and we will start looking for a continuation to the downside here. Okay, so anyway, that's kind of my view. Hope it helps, and we'll catch up with you on Monday. Cheers for now.